Hello everyone. Yesterday we have seen the comparative balance sheet, how to create a comparative balance sheet, right? So today we are going to see the comparative income statement. Income statement, how to prepare, it is the same as the balance sheet. That is, you will be having your particulars column, your years column, 2 years column, increase or decrease column, and the percentage increase or decrease column, right? So first of all, when we are using this comparative income statement, we have to start with sales value. Whereas in case of comparative balance sheet, what we use the fixed assets value, right? But for the comparative income statement, we need to use the sales value. The sales value as given in the question, it is given as 1,50,000 for the year 1990, and for the year 1991 it is 1,80,000. So we need to see again the difference between these two, whether it is increasing or decreasing. So in this case it is increasing, right? So we are going to write with how much amount it has been increased. So for this percentage increase or decrease, just leave it blank for some time. After the sales value we have written down, we have to minus or less any kind of sales returns. Sales returns if it is given in the question. So in the question it is given returns as 3,000 and 6,000. So again we need to compare it whether it is increasing or decreasing. It is increasing by 3,000. Right? So we write it 3,000. Now from this, what we have to do is, from the sales value you have to minus the returns. Returns means the sales returns. So if we minus this, how much we are getting? We are getting 1,47,000 here and 1,74,000 here, and here we are getting 27,000. Now this value, whatever we got, this is known as your net sales. Net sales, what is the formula then? Net sales formula will be sales minus sales returns, or just the returns. You can write it. So total we are getting the net sales. Now from this net sales, what we have to minus, it is your cost of goods sold. Now cost of goods sold is given in your question as 87,000 and 1,04,000. So we have to compare again with whether it is increasing or decreasing. It is increasing by 17,000, right? So from this cost of goods sold, it is net sales minus cost of goods sold we have written, right? So we have to minus these items, these numbers. So if you minus this, you will get 60,000 rupees. If you minus this, you are getting 70,000 rupees. And here we are getting 10,000 rupees. Now whatever value we are getting, this is our gross profit. This is known as our gross profit. So how we can conclude the formula for gross profit? Gross profit is net sales minus cost of goods sold gives you gross profit. Now let me go back again. What is the value? What is the formula of net sales? Net sales means sales minus the sales return. And what is the formula of gross profit? Net sales minus cost of goods sold, right? Now next, to get the net profit, we have to minus again other expenses. Other expenses given in your question is 25,000 and 30,000. So whether it is increasing or decreasing, first we need to compare. So compare it, it is increasing by 5,000. So we have put the minus sign here. That means from this gross profit we have to minus other expenses. So if we minus this, how much we are getting? We are getting here 35,000. We are getting here 40,000, and we are getting here 5,000. Right? So whatever value, the last value, whatever we are getting, this is known as your net profit. Now what is the formula of net profit? Net profit is gross profit minus other expenses gives you net profit. So you need to remember the formulas as well for comparing the income statement. What is it? I'll repeat one more time. First is sales minus sales return gives you net sales. Net sales minus cost of goods sold gives you gross profit. Gross profit minus other expenses gives you net profit. right? So we have completed the income statement. Now we have to see how much percentage it has been increased or decreased. So for this reason, we have to do the working notes. Now the formula for working notes for calculating the percentage increase or decrease is the same thing. What is it? You have to see the increase or decrease in the previous year divided by absolute value of previous year into 100. So if you see here, for the first one, that means from sales, we have to find out sales increase or decrease is how much. First you see in the increase or decrease column how much it is, 30,000, right? It has been increased 30,000. Then what was the actual value? Actual value was in the 1990 columns, that is a previous year column, 1,50,000. So 1,50,000 into 100. So if you calculate this, we are getting here 20%. So this 20% value you have to put it here. Next is returns. So one by one, all the items you have to calculate it. What is the difference? First see, the difference is 3,000 rupees. What was the value here? 3,000 again. Actual value was also 3,000 and 100. Then we are getting here 100%, right? So 100%, write it here again. Next, what is the item? Net sales. So for net sales, what was the increase or decrease value? 27,000 divided by what is the actual value? 1,47,000 into 100. So what is the percentage we are getting? We'll get it around 18.37%. So write it here, 18.37%. Next is cost of goods sold. Cost of goods sold is given as 17,000, that is increase or decrease. It has been increased by 17,000. Actual value is 87,000 into 100. So we will get around 19.54%. Do not round it off, okay? Whenever you are getting the decimal, you have to show the decimal only. Do not round it off by 20. So 19.54%. Next is gross profit. What is the gross profit value? 10,000 here, increase or decrease, and then 60,000 is the actual value into 100. So we are getting here around 16.67%. So write it here, 16.67%. Next is other expenses. So other expenses, what is it? Other expenses, 5,000 divided by 25,000 into 100. So we'll get around 20% here. So 20%, write it here. So the last one, that is your net profit. Net profit value is 5,000 again, 35,000 into 100. So you are getting here 14.29%. So here we'll write here 14.29%. So this is how we calculate the percentage increase or decrease. So the difference between this comparative income statement and balance sheet is, in the balance sheet we always compare the fixed assets first. We compare the fixed assets first and we get the last result as shareholders fund, right? But in case of comparative income statement, we start with sales and then we get the net profit value. Hope this is clear enough. I'll be giving you some questions at the end of this video and then you will be able to do it. If you cannot do it, please comment below in the comment section if you have any doubts. And if you like the video, please subscribe and give a like. Thank you.